So, did you know that in the month of June, 15% of properties that fell under contract, meaning that they received an offer and the seller accepted the offer, 15% of them fell out of contract after being in contract? What's going on, guys? It's Ricky with Technical Solutions. I know our main focus on this channel is about investing and trading in the stock market. I wanted to change things up. A lot of you guys know that we flip about 2 to 3 different properties in the Arizona market pretty often. This is our first full year going into this. We're still trying to stay pretty consistent with buying 2 to 3 deals every single month. We're just choosing to be more selective. And I wanted to share some of the new data that I learned about why properties are sitting on market a little bit more, why there's such a high drop-off rate at 15% of properties that fall under contract, and what this means to maybe you as a homeowner or someone that's interested in buying a home. So again, if you guys learned something new in this video, and or if you guys would like to see future videos like this, please, all I literally ask you to do is to drop a thumbs up, subscribe to the channel, and comment down below any questions you might have about the housing market. So one of the first things that I want to share with you is this data first. So 15% of properties that are under contract have fallen out of contract in the month of June. 1 in 5 sellers are dropping their ask price, and that was back in May. I also did this quick little I live in the city of Gilbert, right? And I thought I would use my city as an example, and I would encourage you to do the same for yours. It's fun. It's fun to understand kind of where the market is at right now, and I'm going to show you exactly what I use for that. With that being said, a year ago, the average mortgage interest rate was about 3%. As of right now, the average mortgage interest rate to get a loan is about 6%, or at least around that 6% range. That is, when it comes down to the monthly payment, I'm going to give you an example of this and why it's so significant. You might not think so with how things might look of 3% to 6%, that's not that big of a jump. But when it comes down to how a mortgage is actually calculated, it's actually a pretty significant jump. And then the other things that I want to bring up is 19.4% compared to last year, we are seeing an increase. So housing prices of what we are experiencing now to what we were experiencing last year are up still 19.4%. Now, why is that important to know? Well, housing prices from a year ago are still higher, but now interest rates to take out a loan and purchase a property, interest rates are even higher. So it's not even so much about the property value being up, but it's how much more expensive it is to actually take out a loan to purchase a property with that. And I'm actually going to start sharing my screen so you can see exactly what it is that I mean by that. This is when I searched that mortgage calculator, it popped up with 6.7%. I'm trying to use an average of 6%. If I did hear somewhere as high as 7 to 8%, I'm not going to use that as an example. And also, I'm going to use the average loan amount. I think at least in my area, or at least in Arizona, is right around $450,000. I'm going to calculate what it was last year at 3%. And of course, this is before insurance, I'm pretty sure. But the monthly payment would be right under $1,900. Think about this, $1,900 to purchase a $450,000 house. Think about, what family, what individual of their net income is going to be going to their mortgage, right? I mean, $1,900, not too bad. Now look at this. The same property value. So I'm not going to adjust that, but from a year ago, property values are up 19% in my area. Now, imagine interest rates being at what they are now, 6%. It went from under $1,900 to nearly jumping a full $1,000 a month. $1,000 a month. This is it's not $1,000. It's about $800. It's a 70% jump on your mortgage payment. But think about that. So it's not even that the property value is more expensive, right? Because even a year ago, with interest rates being at 3%, let's see how high we can go. A year ago, you could have purchased a house, I'm pretty sure it should be for $600,000. So $150,000 more. You get, more of a house, right? A year ago with a 3% interest rate, and your payment would still be less than what it would be today for a $450,000 house. Let's see what we would be capped at. $650,000 which is right around. So imagine being able to have purchased a $650,000 house versus a $450,000 house. Your mortgage would have been the same with a 3% interest rate. You can see why buyers are less inclined, less motivated to purchase a house for or with interest rates being this high. So when asking the question, why are so many buyers that are going under contract to purchase a property canceling at such a high rate? Well, obviously, as the Federal Reserve continues to raise interest rates, this will only have a more negative influence on the overall housing market, as now we are seeing property values or properties sit on market for a much longer period of time. Now, one of the things that I wanted to talk about is what I was able to pull up over here. So it says in my area, the median sale price is $600,000 if you live in California, probably significantly more if you live in other areas. Again, this could be a lot less, but I'm just using mine as an example. We could see that housing prices are up 19.4% from where they were last year. I like looking at this because it gives me a better understanding of why we are seeing properties sit on market for a longer period of time, why we're seeing more people cancel, why it's less motivating for a home buyer to purchase right now. With interest rates, with how expensive it is, it all makes sense. This is why it's so important to understand by raising interest rates, you make it less you make it less affordable to be able to purchase a property. Therefore, you're less motivated to end up buying one. Now, this is one that I wanted you guys to make sure that you can see. 398 homes were sold in the month, if I'm not mistaken, in the month of June. So year over year, this is down 20%, meaning that in comparison to last year, 20% less properties were sold in the month of June than they were last year. So obviously, we are beginning to see a transition from a seller's market to a buyer's market. Property values are still high, but this is why you're seeing properties sit on market for a lot longer, and this is why you're seeing a higher drop-off rate, because again, it's less motivating, it's less, I would say, attractive to purchase a property with everything that's going on right now, and especially with the idea of uncertainty. If we do go into a recession, what happens after that? That uncertainty is less motivating for a potential new home buyer. The other thing that I thought that it would be pretty interesting to cover is that the days that a property sits on market. This is super important if you're interested in buying and or selling a property in your area. The reason this is important is it went from 17 days on average last year that it would take for a property to sell. Now it's 26. So we're seeing, that's a pretty significant jump. And most likely, as interest rates continue to rise, all we're going to see is this rise even more. The number of homes sold probably going to get smaller. And hopefully, the biggest thing is hopefully we can see the median sale price actually begin to go down, right? Like we said, 1 in 5 sellers are beginning to finally drop their ask price. And it's not that, oh my God, the market's going to, it's not necessarily that you should be scared of selling your house. I think at this point it's because it's less motivating for someone to purchase a property with housing prices being expensive and also interest rates being expensive. It just makes sense that now you have less of an incentive because mortgage rates are that much higher. Therefore, people can afford less because of how expensive interest rates are when you take out a mortgage. So again, I just think that we're finally beginning to kind of cool off with the housing market in the sense that sellers are finally beginning to realize that, yeah, my property probably wasn't even actually valued that, and now it goes back to its true value. Now, what do I make out of all of this? You can go down into this and you can really get into it of, how competitive the market that you're in, right? In comparison to other markets. It tells you a bunch of data that I think is super, super useful, especially if you're thinking of buying and selling an area. But the reason that I bring this all up is because for myself as a house flipper, I've been trying to be pretty selective with the opportunities I choose to take advantage of. One of the things that I always love to share is that just because things are a little bit more risky doesn't mean that I need to avoid all opportunities. Obviously, if you come across your dream home and it comes up at a fair price, you can always buy a property, get it at the current interest rate, and then refinance 1 or 2 years later, maybe when they begin to drop. So understand that something that might be expensive now doesn't mean that it always has to be that way, especially if it's something that you actually want to acquire, right? But that you should understand what leverage you have right now as a buyer and or as a seller. If you're a seller, you need to understand that, hey, properties are sitting on market a little bit longer. It's less motivating for buyers to purchase right now because of how expensive interest rates are. And the uncertainty aspect, this is for both buyers and sellers, is everyone's taking a risk. Sellers are taking a risk because they're potentially selling below what previous ask price were, but also buyers can be taking a risk because of the uncertainty of this potential recession, right? The way that I look at this is, again, you should just understand what you have to work with. When it comes down to knowing that we are transitioning from a seller's market to a buyer's market, I'm just choosing to be more selective and making sure that our net margins are still there. Instead of trying to forecast that, hey, we can buy this property and 5 to 6 months later, it's probably going to be worth more. We can't expect that same type of growth that we were experiencing a year ago. It's not that you need to be scared. It just means that you need to be more selective. And this goes to everyone, right? If you're interested in potentially selling your house, maybe this is why connecting with a cash buyer could be interesting. I've seen a lot of properties go up for sale, they price drop, they go under contract, they cancel the contract, they go under contract, they cancel the contract, and it's this continuous back and forth of they're not able to close on the property because buyers continue to cancel due to the uncertainty. I don't know about you. I don't know if this is something that you've been considering. I want you to know that if you're in the Arizona area, I'm only doing Arizona right now. I live in Arizona, right? Myself and my business partner are buying up properties in the average $600,000 or less range. So if your property is valued at less than $600,000, we've been trying to buy them cash, right? So if you want to be able to, receive cash within 10 days for your property and you're interested in selling and or just want to see what we would offer, I encourage you. The third link in the description is my Instagram. Feel free to send me a direct message. Just be like, hey, Ricky, I saw your video. I'm interested in selling a property. I'd like to see what you could offer cash. If you have friends, family, neighbors that are interested in potentially selling, instead of having to pay real estate commissions, all of that stuff, we pay you cash. We have a title company, facilitate the whole thing, and we get you paid in about 10 days, right? If you know anyone interested in selling a house, then again, we can pay you either a percentage and or a flat fee of a couple $1,000s just for connecting us if we actually end up buying that property. So we're still looking for deals out there. We know that they're out there. They're just harder to find. And it really just comes down to, what it is that you want. We know a lot of people that, unfortunately, because of financial situations changing, whatever the case might be, things are tough right now. And we would hate to see people lose their houses just because they don't actually end up putting their house up for sale. So if there's anything that we can do to be of value for you, again, we're open to anything. We're open to any form of creative way in how to acquire your property if that's what it is that you need right now. So feel free to send me a message right now on Instagram. I'd be more than happy to connect. I respond to all of my direct messages. Just give me about 24 hours to get back to you. So I really do appreciate you guys' time. I hope that you learned something new in this video. If you did, I hope that I earn your thumbs up. Please consider subscribing. And again, if you have any questions about the real estate market and you think that we can be of value for you, just feel free to comment down below. Like always, let's make sure that we end the year on a green note. Take it easy, team.